All right, happy Friday, traders. TGIF. Hope everyone's having a wonderful morning, and I hope you guys have survived the volatility this week because it has been a non-stop up and down volatile week. And last night, guys, we had our Amazon earnings. We ripped up and we're right back down this morning. So the volatility is going nowhere. And I look forward to closing out this week strong. So today, guys, is pretty straightforward. Going to rip through a quick prep here, focus on truly what matters, and get y'all ready for Lotto Friday here, baby. Let's get to it. So first thing I want to cover, guys, is obviously Amazon earnings. That is one of the bigger, catalysts here for the day. So let's just start by kind of going over some of those general numbers here. So the first line of revenue, about 137.4 billion. The expected was about 137.8 billion. So they did miss slightly here on the revenue front. If we take a look at their Q1 revenue, what they project about 112 billion to 117. Kitty, stop it. 112 billion to 117. The expected was about 120.5 billion. So a little bit of less forward guidance there. They did, guys, boost the price of Prime memberships in the United States. The monthly fee is going to go from about $12.99 to $14.99. So definitely something that puts a little bit of money in Amazon's pockets. So overall, guys, these are pretty, general results, nothing too extreme. They didn't really say anything too crazy. And even the warn of, the Prime price boost that came about, I think earlier this week or even last week. Regardless, guys, one of the bigger things that Amazon said, I think is worth noting, is they actually kind of unveiled their advertising business. And, believe it or not, it's already the size of YouTube. So you guys can look up this article on investing.com, or I can post it real quick in the YouTube chat for you guys. But I really recommend just kind of checking this out where, again, this earnings season, Amazon kind of pulled the veil off its sprawling advertising business for the first time, literally revealing a business larger than Google's YouTube. Amazon, guys, reported ad revenue of 9.7 billion for the fourth quarter, up 32% from last year and 31 billion for the year. I'll let you guys read this, but again, just very impressed and very, I won't say surprised, but this was really big coming out of Amazon. So this is something, guys, that you want to remember, and we'll talk about whether they price it in today, tomorrow, next week, or it takes a while. This is really big, big news, big business for Amazon that's going to continue to add to their company. So before we move deeper, guys, we will cover, what that did to Amazon. But the biggest thing here that we need to focus on today is our non-farm payroll, which is going to be at 8:30 Eastern. All right, so adjust that to your time zone. Shortly here, guys, after I get off the mic, we will be getting the jobs report. This is kind of the last thing of the week that we've been waiting for. We really need to see if the market actually cares, if it does anything good or if it does anything bad. But remember, this is kind of our accelerator or decelerator today. Let's get to stocks here. All right, guys, so the overall market here, we're going to keep it very, very simple, right? We dropped really, really hard. We hit really, really big key levels, and then we took some time to chop and squeeze. We have to remember, guys, whether it's a bull market or a bear market, we're never just going to go straight down, and we're never just going to go straight up, even if it feels like we've done that for the past year or two. We're always going to get those periods, guys, where we do get those bounces, right? And then we do head lower, or we do get those pullbacks and they do get bought up. That's just how the stock market works. So remember, guys, this week we had a lot ahead of us and we didn't really want to, think too much, in my opinion, and what the market was doing until we got through all of these events. And then big money, the people that actually priced this thing, can then decide how they feel about it, take that to the charts, and make some moves happen. But all that we've really seen happen here, guys, this past week or two, was again, we bottomed, we squeezed nicely under the 200-day simple, this blue line. We broke out nicely back to that mean. And then this morning, guys, we're kind of rolling back to the 200. So very simple levels in play, guys, a very simple path where, again, we drop hard, great. And then we chop, great. And then we get a normal, little relief rally here, guys. But remember, it's important to not get, one, too bullish in this scenario, or, even too bearish at the downside. Just really noting, what key levels can hold, what should it do. I like to call it if this, then that. So let's dive in, guys, and talk a little bit about what we can expect for today. Let's just go start by looking at Amazon earnings. So obviously, guys, if you've been paying attention this week, we've had a crazy earnings season. We had Facebook absolutely implode the market. We had Google try to rescue the market. And then we had Amazon here, trying to save the market. But as you guys hopefully noticed here, we had that rip up on Amazon earnings yesterday after just gapping down on Facebook, selling off, selling off, selling off. We exploded on Amazon. And I'm sure we all woke up this morning like, what the heck happened? We're right back here at the lows, even lower. So again, guys, Amazon numbers aren't too impressive. I think the only thing that is impressive was, kind of the reveal of that ad business. And now we're really going to have to see today, after the job report, does Amazon hold up and start to guide us higher and really see that strength that everyone's kind of assuming it might have? Or does this thing, guys, roll completely over? All right. And do we just kind of sell off into the weekend? It is definitely possible. And now, again, I love that Amazon news when it comes to the advertising business, but who knows, guys, when they're going to actually, allow that to take the stock up. Right now, the market is very vulnerable. So it might just be in sell mode. Right, guys, Google gaps up a ton and they've just been selling it straight off here. We got to truly be understanding that maybe, guys, all of these pops, truly just opportunity to short. Today will be a day to find out. But if we look at Amazon, they had an expected move here of about 218 points. So if we just take a look at what they're currently up, so they close right around these key ranges. At the highs, guys, literally ripped 500 points. It's pretty insane. And then pulled back here nicely this morning, still up about 350 points. So as of now, guys, going to beat that expected move. 218 would be right here. So if they do start to dump, maybe that expected move does not happen by open. But what really matters, guys, is the key levels here on Amazon. And if we just take a look at some of these ranges, when Amazon exploded here on earnings, they ran right up, guys, at 3,300, which if I just show you is right around that 50-day simple. And I currently have it zoned here with the 200-day simple, a really big, call it moving average zone with a few key levels in there as well. So if Amazon, guys, can't get through this, it's obviously a big wall that we have to deal with. However, the support below is just a little more important because this is going to give us that sentiment of if they're going to actually, one, maybe just keep Amazon afloat, keep the market afloat, or rip Amazon and, rally the market, or dump it and really just crush the market. And one line in the sand here, guys, you can focus on is that daily 21 here, right? The daily mean. We've been below it, We obviously ripped through it here, and now we're set to open right near it. So if we look at a daily chart, again, guys, we're going to be kind of gapping up and then retesting this key range. And if we can kind of hold here, then we could potentially start to work back up to the highs of earnings, back up to the 50, et cetera, et cetera. Or again, guys, I don't know what's going to happen. I'm not going to speculate what's going to happen. We have very simple lines in the sand that tell us what could happen. If Amazon starts to fall back below that mean, and especially if the job report, causes a negative reaction, well, then, guys, the market could start to really implode here. Amazon might give it all back. I have no clue what could happen today, but it is definitely going to be a volatile one. So Amazon, guys, I will pay attention to it. If it does kind of bottom here and we get a sense that the market might pop, or at least pop to start, this is a decent place to look to try and, potentially take a little shot at Amazon back to the upside. Or again, guys, if it starts to get below that 30.50, I'm not going to tell you what to do, but it could start to implode here. You could go short Amazon, go short the market, do whatever you think fits best. But that is something that we needed to cover. So back to the market, guys, just to talk about a few things here. One indicator that I want, to put a little emphasis on today is the 4-hour cloud. This indicator does a really good job of helping us time reversals. And this was the indicator that actually helped me time the bottom in COVID. I love it. So again, guys, we kind of slipped here last time when the Fed kind of pissed the market off. And right here, when we fell under the cloud, that was kind of the start to a bearish sentiment on the market, right? And again, guys, we can rally, but you got to drill into your damn head that every pop is shortable if the structure changes to bearish. You can't forget about structure because you have a green day or two, right? Because it sets up a better short. Right here, guys, we couldn't get through the cloud again. Boom, a beautiful short. Only recently, right, did we start to bottom. And we broke on the other side of that cloud. We hit our key level here. And now, guys, we are pulling back. So we have a very important, again, next few days here for the market. Do they continue, guys, to stay on the other side of this cloud and work their way back to bullish? Or do we quickly fall right back below it and start to go and take out those lows from last or from recently. I forget when that was by this point. So again, guys, keep an eye on that cloud, but just to talk about a few key levels here, you can mark in your chart that I'll be using as a compass today. Here's what I'll be looking at. Boom, 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 boom. Ooh, let me not do that. All right, this is enough in front of us. So again, guys, we got the jobs report here in a little bit. This can definitely have an impact, or is going to have an impact of where we're going to open this morning, but I just want to lay a few key levels and a few foundations that can help guide you no matter what happens. So big level above, my friends, is going to be this 45.05. It's currently where our new point of control has started to develop for this current month. So obviously it's not been a long month at all. We're only a few days into it, but it's been a pretty valid level here. We held it yesterday, we chopped around it, we held it overnight, and we broke through it this morning, and we held right at our zone. So if we do, pop here, guys, that 44.92 to 45.05 is going to be a very big target for the market, or maybe that's where we do pop to. But if we do fail here, we could roll right back over, guys. Remember, that's kind of where we were last night, or yesterday's end of session. We had slipped under our zone, rejected our zone, and we're literally bleeding towards the bottom until Amazon saved us. We double topped overnight, and now we're right back here. So again, I don't really love to see that, guys. I don't know if this is just bait, if it's just volatility, whatever it might be. We do have to stay on our toes here. But again, guys, if we hold 44.55 like we're doing, we can bounce up to this key range. If we can get through that key range, well then, guys, we have that reversion to the mean, which, we kind of started at here yesterday and failed. We popped up to it this morning and failed. If we can't get through there, guys, it's not very bullish for the market. And then vice versa. If we do roll back over and we do take out that 44.55, well then, guys, we have the 200-day simple right below here at 44.37, the zone with a nice key level as well. So if you guys know how I trade, it's zone to zone. If we come up here and hit it, we can go here. If we bounce here, we can chop. If we break it, head to the bottom, through it, head to the top. We got a heck of a journey today. I want to cover NQ, guys, real quick. Just some levels in play. Going to save my thoughts on this scenario and analysis because it's the exact same as the overall market. So just cover the path and key levels here that matter. All right, guys, so a few key levels you want to focus on. One is this 14,800-ish. It's where our new point of control is starting to develop. So again, just like ES, guys, we might pop to it and then absolutely fail, take out those lows and head down to the next little zone here. Or maybe we don't even get through that zone and we just get stuck right here and roll right back over after the job report. If we do roll over, guys, I'm obviously expecting to take out yesterday's low around that 14,456. And then we can start to actually take out my key ranges here. Call it, 367 down to that 14,223. Really nice targets here. And then above, guys, in NQ, we do have some, again, big resistance. By no means is the market super, super bullish. These earnings have a chance to save it, but they're not really doing their part, at least for now. But if we do pop, guys, back to point of control and for some reason start to hold, or maybe we even open through it on a job report, the next target, guys, would be trying to take out the bottom of this key zone, which is kind of where we struggled at all of, yesterday's after-hour session. Spiked near it yesterday, couldn't even test it. Overnight, we're not even close. So this 14, call it 858, guys, is a hard level, right around that point of control range. If we get through it, well then, guys, we're just focusing on 15K, which pretty much is the 200-day simple and also the reversion to the daily mean. If I just show you guys that key level here. All right, we kind of have the mean, which is the white line, the 200, which is the blue line, all right up around there. So that's the targets, guys, for today. Again, I have no clue what to expect. I think it was pretty shocking to wake up and see, that the market rolled completely over. Is that a super bullish sign? Absolutely not. So be careful today, my friends. Let's go cover VIX. Oh, there's no VIX-C anymore. Crap. VIX. So I love VIX, guys. If you follow me in any of the rooms in Simpler, whatever it might be, hopefully you know these VIX levels by now because they work like a charm. If we take that journey all the way down to 20, the market takes the journey back to the mean. If we can't break 20, the market does a good job of rejecting the mean. Boom, boom, boom. So for today, guys, very simple. Focus on VIX 25, where VIX actually gets above 25 and starts to hold and works its way to 29, then the market is going to start to go lower. Where in order, guys, for the market to actually rally and actually have a little bit of confidence and edge to it, You do need VIX below 25, and you need it, sharply heading towards 20. And I'm going to keep saying this, guys. As long as VIX is above 20, be very mindful that the market is very vulnerable. So again, guys, we can rip, 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 rip. Volatility has gone nowhere. We can roll right back over hundreds of points. Be very smart with this market. I know it might be giving everyone a headache, but we got to just take it day by day. Focus on these key levels, guys. Make sure you position yourself on the right side of the coin. And again, just managing your risk. Go slow in these environments, guys. Size down, have fun. The volatility can really offer crazy opportunities without having to put on a ton of risk, because obviously, guys, it's a roller coaster here. So we got to work with what we got. So that being said, guys, just going to cover a few more things here. We've talked about Amazon so far, which will be a focus for me today, potentially. I want to see where we open on the job report. And then obviously, guys, we have 0 days today. You could consider, SPX, SPY, QQQs, whatever might fit your risk tolerance. But just a few other setups that I personally am keeping an eye on. One is NVDA here. So NVIDIA, guys, has been pretty straightforward. They've had a very, very large inflection point that they've been struggling to get through, which was this, just call it 240 range. They broke underneath it. And every time they got near it, guys, you just short it, right? Got near it, you just short it until the day the stock gets to it and it doesn't get slammed. Well, that tells you guys it's starting to reverse. NVIDIA reverts to the mean, pulls back and hits its zone, does it again. Pulls back as and hits its zone and kind of bases here. So NVIDIA is definitely one of those names that's just kind of coiling, trying to figure itself out. And off of this key range, guys, you definitely can expect some, action. Yesterday, opened at it and popped nicely. Pulled back to it and just sat there. This morning, guys, continuing to sit here. So NVIDIA is one of those great names that you truly can play as like a flex name. You could play it up, you could play it down. The premiums typically offer, decent opportunity in both directions with a lot of good liquidity, right? There's a lot of volume on NVIDIA. You don't need to worry about. It's not like a shop, for example. So again, guys, this range is huge. 243 to call it, 240. Very, very big. Or if it does continue to hold it here and the market does pop, right, tech today, NVIDIA could rally back up, guys, towards that 250, 254. That gets you back to the daily mean. We have been kind of putting in a lower high here every day. So maybe NVIDIA does crumble, which again, why I think it could be a little flex opportunity. If the market is bullish, you could play it off of this key range, looking to get back towards 250, potentially even higher. Maybe, guys, it does pop. Maybe it, continues to put in that trend of lower highs here. And then just like the market, if we do crumble today, if NVIDIA, guys, breaks this 240 zone, I see them bleeding straight to 235, 230. The next zone, right? You can watch a little halfway level in between, but I think with volatility where it is, the pressure, this thing's just trending down here. It's going to have to quickly reverse, or that pressure, guys, is just going to mount and NVIDIA can roll over. So if looking at NVIDIA, guys, with an ATR of about 15 points, all right, they closed right around this 240 range. So they are set to open pretty much flat. Again, guys, 15 points. I wouldn't expect it to rip here, but upside, 250, 255 the most I would expect. And again, guys, maybe Jobs absolutely rips us and we open at 250. I have no clue, but these are the levels in front of us that matter. Then again, 15-point ATR. We're just looking for 230 to 233-ish. That covers, guys, about a 9-point span. Very, very healthy. So for NVIDIA, guys, I'll be keeping an eye on something like, the 245s to 250s on the upside. Remember, it's Friday. It's cheap. Strike selection is the easiest. Downside here, my friends, 240s, 235s are looking nice. 230 to be an extreme lotto. I'm going to really try for the 235s if I like the downside. Remember, guys, you want something realistic. You don't want to go too far out. You want something that, if we just flushed this morning, realistically could get in the money. So I'm going to keep an eye on NVIDIA here. And then another one of my favorites, guys, well, I won't call it a favorite, but one that I watch a lot is Shopify. Very, very hectic name. Got destroyed, guys, at this key zone, really for no reason, which is kind of getting destroyed on its own. It got gapped down on Facebook earnings, just kind of chopped at a very big range. And then they spiked on Amazon earnings. And then they're right back down, kind of just like Amazon. So this is another name, guys, that if you don't want to play something like an Amazon, that the premiums might be absolutely insane. Shopify might be a little tamer, and I don't even want to call it that because Shopify is usually a pain in the butt. But it could be a name that actually reacts the same way, where again, they both ripped, they both pulled back. I think if Amazon rips today, Shop will probably head back, guys, towards that 900 range. Anything, up to the 900 calls could be a pretty good lottery ticket where those could really explode, guys. Vice versa, if everything does implode, we could be right back towards 800. And if we actually slip lower, I think, Shopify could be at 780 today. So I'm going to be keeping an eye, guys, on the 900 calls, 800 puts, something in these ranges. Again, just being prepared for anything here. If jobs send us higher, then great. Maybe the 900 calls can pay it today. If we look like we're going to implode, then the 800 puts are looking like a nice opportunity here. So that's my thoughts, guys, on Shopify. And, we can cover one more name here of Google. Actually, I don't want to cover Google. I want to cover Qualcomm. So Qualcomm, guys, interesting name here. They reported pretty decent earnings. Was that Wednesday night? Yeah, Wednesday night here. And they really didn't do much. They kind of got crushed, premium wise. They did spike yesterday, then just kind of chopped. But this is a name, guys, that did rally, pretty large into their earnings report. And this earnings is slightly, guys, reminding me of last earnings, where it's not exactly the same, but it did rally, call it 20, 30 points into earnings. All right, I was kind of looking at this yesterday. We rallied, that 20, 30 points into earnings, and then it squeezed, and then it exploded. So if you guys, again, I'm not saying it's going to happen, but we kind of got that same rally, and now we're getting that squeeze. And I'm curious if it's just going to explode today, if the market can support it. If not, guys, it can just sit here and squeeze. But if the market is strong, guys, I think Qualcomm could easily pop back up towards 190. Those are very, very cheap options. They closed around 20 cents, and they truly could spike to close to $2, which would give you, a crazy, crazy return. So just something I'm keeping an eye on, my friends, but we got plenty to watch today. Make sure that you keep it tight. Make sure that you manage your risk. Make sure that you're understanding that it is going to be volatile. So don't think that you can have tight stops. Don't think that you can size heavy and get away with it. Really, guys, be smart in this environment. It's a fun, challenging one, but it also could be a very rewarding one if you treat it respectfully. So hope you guys found value this morning. If you did, drop a comment, drop a like, make sure you subscribe. But we covered all of the indexes. As always, we covered VIX, some big key levels to focus on. We covered Amazon earnings, Google, Shop, NVDA. Plenty to focus on today, my friends. And remember, we got that job report here in, a little less than 30 minutes. So thanks again, guys. TGIF, go out there and kick butt, and I'll talk to you in the next video. I appreciate your guys' support. Trade well.